got to understand what sort of activities you need to do. And I've come full circle, or no, 180 I guess, in my thinking, because I've been trading for 19 years now, almost 20, and for a considerable amount of that time I had a mentality that, you know, being a full-time trader or being a successful trader is that you had to trade, or, you know, everything all the time, and you have to constantly trade, and like if you have gaps of trading in your year, you're failing and blah blah blah. And yes, I could equally argue that yes, you do need to be consistent, and if you are executing a system, you need to be consistent to reach statistical expectancy. However, you've got to weigh up active manual trading with ROI, right? And sometimes it's better just to not trade and just sort out your spot trading and sorting out your portfolio management. And so portfolio management can easily outpace any profits that your manual active trading can do, so long as you're timing it in the right sort of time, so to speak. So let's say this is a typical Bitcoin cycle. Generally, in a bear market, you want to be in cash or fiat, or stables. So you can either sidestep the whole thing and just do nothing for a year and just, I don't know, set up a business or just sit on your hands. Or this is where you can be doing your active shorting. So yeah, doing your perpetual shorts and all that, that is what you can do. Now, unfortunately, I called so many things correctly in 2022. And some trades are executed perfectly. However, I had 2 bad months in 2022, which completely ruined everything. 2 positional trades which just didn't work. In fact, they were correct. I just executed slightly too early on both of them. So, and this is the, you know, the fun and games of trading. You know, there are 2 big positional trades, you know, various points of this, where I was bang on in the theory and the thesis, and it will go up or down or whatever. But I was just too early or too late. I can't remember. It's just poor execution. So, although, yeah, so even though you can nail so many of the things, you can still screw up, like I did in 2022. Now, when you get into the yellow phase, where it's, you know, the choppy sideways action, you don't really want to be trading, because you can only make proper money from active manual trading in a trending market, unless you're, you know, a range trader and you're trying to get the ups and lows and whatnot. But, you know, it's a lot of work, a lot of time commitment for very little uplift in profit. So during the choppiness, this is where you actually need to turn into a portfolio manager. And this is where you need to basically focus on your spot trades. You know, get your portfolio set up. Once you've confirmed, you'll never catch that spike low bottom, and it nearly always retests the bottom. So there's going to be a chunk of this section where you just miss, and this is why, you know, I didn't get the 15k low. Obviously hindsight's great, but my pot, I was 100% back in spot crypto, you know, when Bitcoin was near 22, 23k. So, you know, I got in effectively somewhere around here, or on a pullback, somewhere like that. And during this stage, where I guess from here to sort of here, oh, I don't know what's happening with my pen here. This is, yeah, you're still doing your portfolio type stuff, and although it seems attractive to do some active trading, you know, there's a lot of gotchas, there's a lot of fake outs, there's a lot of, you know, you really want a consistent trend, not the, you know, the fake sort of trend that we're seeing right now. However, when it's proper bull season, where, you know, the average Joe is can spot that it's a bull market, this is where you go back to active longs, where you use your perpetual, as the exchanges call it, inverse perpetuals, perps, let's just call them, where you can use your ETH or Bitcoin as collateral and, you know, trade like you normally do. And that way you've got the collateral which is going up in collateral as Bitcoin and ETH goes up. So even when you do get a trade wrong, because the collateral is going up in price, you know, it's sort of a nice safety blanket, and then you can go crazy.